Hi, my name is Roger Slater. This video is actually about really what a bank does to a customer that does not pay their loan. And a lot of times borrowers don't really understand this. When a customer does not pay their loan, a bank typically follows a series of steps to address the delinquency and try to recover the outstanding debt. These steps can vary depending on the bank's policies, the type of loan, local regulations, but here are kind of a few common actions that the bank may take if you're not going to pay your loan on time. The first one would be a reminder notice. Um, Initially, the bank will send reminder notices to the customer if a payment is missed or if a payment is late. These notices serve as a friendly reminder and may include information about late fees, and other things. But definitely there on bank loans there are late fees, so you have to be cognizant of that. Um, and then late fees. Most loan agreements have provisions for late fees when payments are overdue. These fees can be added to the outstanding loan balance, so they can increase the total amount of the loan, or they can be due and payable on the next basically payment. So if they send you a notice every month, that you might notice the late fees on there. Sometimes they don't send you notices; they just say the bill is due in this month, this time. You're supposed to know that and pay it, whether you get a notice or not that it is due. Number three would be communication. The bank may reach out to the customer via phone calls, emails, or letters to really discuss the missed payments and explore possible solutions. Sometimes they may offer temporary payment arrangements, loan modifications where they change um, the loan terms, or refinancing options. A lot of this can be done. The bank does not want your collateral. They do not want to foreclose on this loan. So it is the bank wants this loan to be able to be paid in full. So the bank will got other way to make sure that happens. Number four will be credit reporting. If the delinquency continues, the bank may report the late payments to the credit bureaus. A lot of times they already report to the credit bureaus, but when you have a business credit, there is no credit reporting agency for businesses. It's really only for individuals. So that is why they always get individuals get the guarantee, so that a lot of times it'll show up on their credit. So if they don't pay the business loan, then it'll show up on the individual's credit. So anyway, if it's not showing up on your credit, and I knew a bank once that didn't. They didn't even report to the credit bureaus. I guess they had some problems reporting in the past, and they had some problems with the credit bureaus, and they finally just said, we're not going to report. And that's fine, but you're telling all the people you're reporting. And some of the people are wanting that because they want that credit. When they pay on time every month, they kind of want that credit. So that can be a real problem. So anyway, credit scores, they make it harder to obtain credit in the future. They make, of course, loans pay more. A lot of times you just won't get the loan if you have bad credit. Having no credit is equal to or worse than having bad credit. Don't ask me why, but it's always that way. I had a customer once that was really good, made good money, never borrowed in his life, was probably in his 30s, wanted to borrow for either, I think it was either a business or something kind of substantial. And my boss just told me, hey, if he ain't got no credit, we don't know how his credit is then, so we're just going to say no, and we won't lend to him. So anyway, just remember that if you're one of those people that always pays in cash, you want to borrow some money sometimes so that you have a credit on the credit bureau. Anyway, number five would be collections. If the customer fails to respond or make payments, the bank may transfer the loan to its collections department or hire a third-party collection agency to recover the debt. Collection efforts can include more aggressive communication and negotiation for repayment. Depending on whether these guys, I've seen some credit bureau or some collection agencies that are very, very, especially for the banks, because remember, if you're a business, you don't have the same protections that an individual does that borrows. So a lot of times a business loan will not be covered by uh, the same safety net type things that an individual's credit is. So it can be pretty brutal. Those guys are not going to come to your house or anything, but on the phone they'll be pretty rude. So keep that in mind. And a lot of times people just don't talk to them, and that's fine. But if you really are behind, the best thing is to do is talk to the bank. Number 6 would be legal action. In some cases, the debt is substantial and the borrower refuses to cooperate. The bank may pursue legal action. This could involve filing a lawsuit to obtain a judgment from a court. The thing about judgments is once they get that judgment, then they can garnish wages or they can place liens on the borrower's assets. And this can be bad. I do know things like tax liens. People think, oh, that's no big deal, it's just a tax lien. Well, tax liens are in front of bank loans. So if a bank sees tax liens on your business, it will not loan to your business because it's going to be in second place to those tax liens. So remember that. I mean, tax liens you don't want tax liens at all. So anyway, the number 7, you're coming into the end here where it's repossession or foreclosure. For secured loans such as auto loans or mortgages, the bank may, repossess the collateral, seizing a car, or initiate foreclosure proceedings on the property, like if it's a house. I do know with the car they have to actually find the car before they grab it. And I know I had one when I was a banker. I had one that he was actually he's in the publishing field, and he was pretty well known in St. Louis. So I just finally decided I'm going to go ahead and grab the car. So I had my people that do that go ahead and find it, and he was in a gated property. I couldn't believe it. So anyway, they couldn't get past the gate to get the car, and they talked to him, and eventually we did work out everything. But still, it was one of those things where you probably need to know if the car is parked in a garage or in a property that has a fence around it, because you can't go in that fence and get it. So anyway, but and this really happens when payments are consistently missed. I mean, this happens as a very kind of an end game for the bank. Debt settlement. In certain situations, the bank may agree to settle the debt for a reduced amount if the borrower can make a lump sum payment. This can be on the option to avoid legal actions and resolve the debt. A bank doesn't want to acquire a bunch of legal fees, just like you don't. But sometimes they'll they want to go ahead and fight it the hardest they can, just to show people that they are, that they're not a pushover, that they don't just give away money, and they don't. So anyway, but there comes a point when they may settle for less, than was borrowed, just to end the debt, just to end the, and get the payments resolved and everything. Now, for a person, the last resort is usually, like a bankruptcy. The borrower may file for bankruptcy, which can have significant legal and financial consequences. Bankruptcy can discharge some debts or restructure payment plans. Banks hate bankruptcy. And normally, it either has to be an individual bankruptcy or a company bankruptcy. So it really depends on who does the bankruptcy. If all the assets are owned by the company, and you do a personal bankruptcy, then they can still pop your stuff. They can still go get your inventory and your collateral or whatever you have. So you do have to be careful on that. But the banks, really don't want you to declare bankruptcy, because sometimes they end up on the wrong end of the stick. They end up with less money. So anyway, it's essential for borrowers facing difficulties in repaying their loans to communicate with their bank as soon as possible. Banks often prefer working with borrowers to find mutually, agreeable solutions rather than resorting to legal action, which can be costly and time-consuming for both parties. Additionally, borrowers should be aware that their rights and legal protections under consumer lending laws, in their jurisdiction. You want to know what those are. But just remember, a lot of those protections and rights for borrowers are usually for the individual. They're usually not for the company. So companies don't have as many protections as individuals do. So if you're borrowing as an individual, then yeah, they got those protections. But if you're borrowing as a company and you're just guaranteeing it, you don't have that. You may declare bankruptcy, that's fine, but they're still going to come after your company debt and everything. So anyway, thank you very much. I appreciate you, watching the video, and please subscribe if you like this kind of content, the banking or borrowing or money content. So anyway, if you got anything out of it, I hope you would go ahead and hit the like button, the thumbs up button, because it does help the channel. If you got something out of it, I would hope you would. And then my name is Roger Schlueter. I will see you on the next video. Thank you very much.